Hello everyone, this is Miltos Savvidis, and this is my weekly trading roadmap for the week starting the 13th of April 2015. This weekend it was actually Greek Easter, so today obviously met up with the family and had a massive lunch. So forgive me if I'm a little bit slow and lethargic. I'm having a bit of a food coma at the minute, um, but I'll try and get through this pretty swiftly so we can get on to the week. So, beginning Monday, we don't really have much data. Don't have much coming out of central banks apart from the BOJ minutes. Um, and not much I have to say about this personally. Just the fact that we have the next BOJ coming up soon. I think towards the end of April. So be wary. We did have some comments about some possible action coming out. So if there is any hints of that in the minutes, I would expect some strong moves. But other than that, I don't think there's much to be expecting out of that. I'm going to go straight into some of the market structures because there's not really much out of with regards to data. And if we take a look first of all at the Eurostoxx 50 and how that's panning out at the minute. At the minute, we've seen a breakout this week of that very large congestion zone we were in for quite a bit at the back end of March. You can see we've just built a lot of consolidation and energy in this pattern, and we gapped up last week. So we gapped up, quite nicely. We left the gap. We had an inside day. We broke to the upside, and then on Friday we actually slowly drifted higher, which was interesting. We didn't have much action going on during the day. It was quite a slow day, but towards the back end of the day, uh, there was a bid in the market, and we basically closed at the high. And if you take a look at how the market looks like, the market structure looks like on a market profile, the weekly market profile, you can see that we've closed at the high, and we also have 3 TPOs at the high. Now, I remember when I was trading the Bund in 2014, where we actually saw what was actually 2013, 2014, when we started seeing the very big bull trend in the Bund. The beginning weeks, where we first started getting those trends, we saw profiles that are very similar to this. So, you know, we were gapping up or pushing outside of value, seeking value higher, and then at the end of the week, we would close with a high number of TPOs at the high, which is it's very indicative that the market, it's showing you that there is no tails here, there is no actual sellers in the market, and it's very willing to trade at these high prices and close at the high prices. So when you get a large number of TPOs at the high, it's showing, willingness to accept value higher. So at the minute, for me, I mean that is an extremely bullish signal. Um, and obviously we have left that gap down below. In any case, it doesn't mean that we can't, push lower and test to seek um, some at least some passive buyers for any of these longs, these weaker longs that have gone into the market if they wanted to get squeezed out. And we could be looking at some areas like these 37.17s, which if you look here is an extremely low volume node at 37.17. So I'm going to be looking at that coming into this week. And then just below that, the weekly value area high at 37.12s, which is also quite a low volume node, and it's just below that single print which we left last week. I'm going to be looking at this area quite keenly, this 5-tick range. So if we do get in this area, I'm going to be pretty keenly trying to buy or looking at least for some buying price action. Obviously, it's going to depend on how it gets there and what time it gets there. As Lee Gibbs says, it's always a matter of timing and what part of the day we're in. Obviously, if this gets here at 5:30, 6:30, or 6 o'clock p.m. when the S&P is selling off hard, I'm not going to be standing in the way of this. As opposed to 8 or 9 o'clock, 10 o'clock a.m. European session, I'd probably be looking for a buy in this area. Just below that, we've got obviously the 3700s, which is last week's VPOC, and pretty much the the POC, the point of control of last week's profile. And then if we look down at 35.72, that's the weekly value area low, just ahead of the 35.63s, which was 2 weeks ago value area high, which actually left, which was the low of last week. So very intriguing profile as it stands right now in the Eurostoxx. Now obviously, to the upside, you'd have to be pulling out your template charts. I'm not going to be going through that. Dan already goes through that in depth in his his morning streams. So definitely tune into that. But obviously, looking at those 37.53s, which was that high we left on Friday. Moving on to the Bund, also has a pretty interesting chart structure, and it's actually quite nice the way it fits in with the weekly value area profile. So if we take a look just at the daily charts, as it stands right now, we're still holding this gap between these 58.90s and the low of the day right in here. And I'm looking particularly at the fact that, okay, we've had this bit of a cup and handle formation. You can't see it quite nicely on the daily. On the 60-minute, it looks a lot nicer, but nevertheless, the structure was we had the two lips of the cup right in here. We had formed a little handle in here, which came down pretty much to the 50% of that cup, and then we started breaking higher. Now the break for me was awful. Now it could be just because we were trading at such extremely low yields, but normally a structure the way I've seen like this before, especially with the large amount of absorption we saw at these 58.35s 2 weeks ago, for me, the way we broke was just not convincing for me. I mean, I was looking for that move. I was looking for a very quick move to the upside, and we just didn't get it. The volume was lackluster. Even the volume on the way down, I mean, it was a little bit higher than the volume on the way up, but it still was quite lackluster, and it didn't really say much for me. You do expect on these kind of structures, when you break that after such a long time of absorbing and coiling and creating that energy, you'd expect very quick flush, and for this to be moving with power and energy. There was no momentum in this, and it's looking a little bit precarious, the fact that we've got these two days here, one inside day on Friday with these wicks, and we still haven't been able really to close above this level, this high level in here. So it is quite the structure as it is. It's quite interesting. I mean, I'm not necessarily bearish because we still have this gap, but I am looking to see if we can find an offer below these 01s, because we have that inside day. The high of the inside day is at 37s, the low is at 01s. And if we take a look quickly at the market structure on a weekly profile, you'll see that fits in. I mean, we have that what we call technical confluence, which really works if you're looking for really high quality trade to put on. When you've got technical confluence, it gives you that much more confirmation, because there's a few different things that traders might be looking at. Maybe not all traders are looking at this profile, but some traders are looking at just the candlestick chart. But if you're looking at all of them all together and you see confluence, that can be helpful. So let's see what we have. We've got the weekly value area of the profile of last week. The low of the value area is at 04s. The high of the value area basically 2 weeks ago is at 00s. So in this region, the price action is going to be very, very interesting, and I'm going to be keen at watching it intently. So when we get to those 00s, 01s, which we've seen has been a good pivot, and that is the inside day low. If we see a really heavy offer through there, and it has to be heavy, it has to have juice, and it has to follow through. It can't be obviously, if you see something that blips through and then there's no follow through, be very wary of that, because that could also be a trap. But you want to see heavy offers. You want to see it take the bids one by one. If we get that kind of price action through here, well then I'd say I'm not going to be a buyer. I mean, I really wouldn't like to be a buyer, not really until we get to these 62s. I mean, if I am short, I'd be looking to cover, not even at maybe some at the gap fill, but mostly at the high volume areas down here. which is already between these 76s to 78s, which we've seen was a nice level 2 weeks ago. But obviously, on the contrary, if we don't manage to get below here and we hold that gap, we hold that value area low, then theoretically we should start rotating our way back up to these 34s, and then through those 34s, we've got the 37s inside day high, which through there I'd expect this should be a decent break. So I think the Bund at the minute for next week is setting up quite nicely. It's got a lot of technical confluence. If we see a carry on through here with the gap holding, I'd expect a nice move. Likewise to the downside, if we see some heavy offers, I expect this, large cave in time and volume value to fill in as well. Because you see this, there's just obviously not a lot going on in here. We've left this huge void, and really for me, the way this is looking, okay, we did close outside of 2 weeks ago value area, but the close is just not convincing yet. Obviously, they could start building value higher. This was not very convincing for me yet, especially because the volume on the way up wasn't good enough in my view. In any case, moving on to Tuesday, we've got the UK CPI. The consensus of that is at 0%, so watch out to see how we're looking on that front. If you're trading your gilts or your cable, that's going to be quite an interesting market to be looking at through the UK CPIs. We're obviously on a pretty critical point, so if we do start getting some negative prints or some deeply negative prints, obviously you would expect the cable to react quite negatively and the gilts to react quite positively, as in bullish. So moving on, we've got the European industrial production, US retail sales, which is also a very important number coming out of the US, gauging the consumer demand. And that consensus is at 1%. We also have the US PPIs. And then from a central bank policy perspective, we've got the Fed's crush the quota, the uber dove, but a non-voter. So looking at the Tnote with respect to the US retail sales, now I would have gone through a market like the cable for the UK CPI, but for me the market structure at the minute doesn't warrant any sort of explosive move that I can take advantage of. It's already kind of broken out of its structure, so I'm just going to move on to just a play that I might see in the US retail sales. So the US retail sales, we've got a consensus of 1%. Now the Tnote structure as it stands, this is a yield chart. We're currently, obviously we had a move up in yield last week, but we do, on a yield standpoint, have an inside week. So that's quite interesting for me, because obviously, we've come quite a bit lower, but we're not really moving below this low, and we're still trading above this bit of a value area from this day in here. And if you can see, this is the kind of trend channel that we've been holding basically since Q4 of 2013. So the whole of 2014, we've basically been in this trend channel that's been moving slowly and slowly to the downside, obviously with these deflationary fears or disinflationary fears. The global bond markets pretty much have been looking like this, just a slow and grinding move to the downside. But given this structure right here, if we do get better retail sales numbers, so maybe, I mean, this is already quite a high number, to be honest. 1% consensus is quite high. We're usually playing with, decimal places. If we do get something like, 1.2, 1.3%, just something extravagant, I'd expect a pretty strong offer in the Tnote. So the yield should be pushing quite strongly to the upside. Obviously, on the contrary, we'd have to, make a fair bit of way to the downside before we actually can break that inside day or inside week to the downside in yield. But if we do get there, by the time this figure comes out, there could be some scope. If we do get a weaker retail sales or a lot weaker retail sales, there could be some scope for that pattern to break with it. This is obviously, it depends. We're looking at Tuesday, so it depends how we're looking after Monday's trade. The further and further we go on into the week, these market structures are probably going to look a lot different, a lot more different. Wednesday, data point front, we've got early in the morning, we've got Chinese GDP consensus is at 7% year on year. So that is bang on the level that most economists, most analysts are looking at. Um, Even the PBOC, the government, they're going to be looking at this level quite keenly. So if we do start printing at levels below 7%, that is going to spark some fears and possibly some sort of expectation for stimulus in the future. So definitely keep an eye on this because we're at a very critical point in China. There are some fears slowly but surely building in China. Um, then we've also got the German CPI. Obviously, it's a final reading, so I wouldn't be expecting much market volatility out of that. The U.S. industrial production, and of course, every Wednesday we've got the DOE crude oil inventories. On a central bank front, with the Bank of Canada rate decision, there is no rate cut expected out of the Bank of Canada, but do bear in mind that they do surprise rate cuts. They did one in January, so bear that in mind. If we do get something that's a surprise, we could see some pretty decent moves. And if you look at the CAD, actually, um, um, I don't think I posted that up, but if you do look at the CAD, it's in a pretty interesting flagging formation against the dollar. So the dollar CAD is actually looking like it's flagging, obviously looking very bullish. So if we do get some sort of, you know, surprise rate cut, I'd expect that to move very significantly to the upside, and that does play in well with all this dollar strength that we've been seeing last week. The ECB also has its rate decision and press conference. It's unlikely that we're going to see any sort of further action out of the ECB, but there is a possible scenario that I'm not expecting any sort of actual action, but Draghi could hint maybe in his Q&A session where he's been doing a lot of his policy making in the Q&A part of the press conference. If he does hint to lowering the deposit rate, that effectively will imply that they'll be buying more short-term debt. Obviously, the German Schatz, which is determined two-year bond, that's already trading sub 0.2%, which is basically the cap on what the ECB said it would buy. It said it would buy up to the deposit rate. So that's already trading below that rate. And if they do lower the deposit rate, or they hint to lowering the deposit rate, that should be quite bullish for the Schatz, probably all the way up until the belly of the curve, the 5-year German bubble. I wouldn't expect much. I think that the Bund and the BOC will probably be quite whippy, and if anything, they'd probably you'd see the curve steepening quite a bit, so you might see a couple of sellers in the Bund and the BOC. But that's the only real scenario that I'm going to be looking at. I probably will try and flag up a few more scenarios coming into the ECB, but there's not much really expected coming into this Wednesday. We've got the Fed's Bullard also speaking on Wednesday. He's a non-voter and a leaning hawk, but Bullard has moved the markets, believe you me, many times. So definitely keep an eye on what this man has to say. He's definitely a heavy hitter when it comes to central bank speakers out of the Fed. Now, market structure-wise, the euro dollar, just wanted to take a look at how it's panning out right now. Maybe just point out a few levels. From a market structure perspective, there's not really much to go through. We've already broken this pennant formation. We've closed quite a bit lower. As John Harmon was saying, in this area, I didn't bring up the profile for this, but there is the VPOC, the cumulative high volume node for this area right in here. Definitely take a look at that. I haven't brought that up, so sorry about that. But John Harmon did go through it in one of his streams last week. So take a look at that, because that's probably a key area we're probably going to get to quite quickly as it stands right now. There's been a lot of dollar strength last week. Obviously, this low 104.63. Looking further to the downside, there's a level that I looked back all the way to, I think, the 2000. I mean, literally right after the euro was made. So 101.53, I think, and about 10 ticks above that, a 101.64-ish. There's basically some good swing highs and lows in this area. So I'd be looking at this area. I mean, it does seem quite a bit away, as it stands right now. We're looking at about 500 odd ticks lower, but you've seen the way this has been moving. This is last week we pretty much did 400 ticks. So it's not wouldn't be unbelievable, and it wouldn't surprise me if we got that, or even if we got to parity um, by next week or in 2 weeks' time, the way we're moving. So just keep that in mind. Watch your levels, watch those key levels, those historical levels, and obviously this parity level is going to be quite important. If the parity level does work, really wouldn't expect it to work to the tick. I mean, if you're really trying to buy that area, maybe buy anywhere from 5 to 10 to 20 ticks higher, just because it's just a level too many people will be looking at. If it doesn't work, it's going to shoot right through it. So I mean, if you're going to try and play it, probably front run it by quite a bit. In any case, looking over at WTI crude oil, obviously we've got DOE crude oil inventories. Not so much. I'm not doing this purely from a event-driven risk perspective. Obviously, we did see last week that the oil inventories were extremely high. We had an 11 million print on the oil inventories last week, and this whole sell-off we saw that day was due to that. Just putting in a scenario, obviously we've seen this pretty nice trend line. It's worked a few times, sometimes obviously on this day where we had the Saudi comments, it did just blow right through it. But it has been working quite a few times, all the way back to December 2014. So bear in mind, if we can't get below this, I think technically we're looking still quite bullish. And if we do start making this move slightly higher and get above these 52.48, start building a bit of value in here, I think this 52.24 is looking super vulnerable. Just because we've got the swing lows in here, that's a very flat swing high for me. We've got basically 1, 2, 3, 4 swing highs, very flat. There's going to be stops above here. So just keep that in mind. Above this level, there's going to be stops, and there's going to be some buyers pushing this higher. And just from a wave count perspective, if you take this into account, obviously we couldn't close below these 43.58s. We made that low at 42, basically 42 bucks. We pushed higher. If this is our first wave and this is our second wave lower, this could be the one of the three. You've got your 2 of your 3 here, and if we are seeing potentially a move back up, and this is just obviously a scenario that would be null and void if we break down below this trend line. But if we are possibly seeing a 3 of 3, that could be quite big. So just bear that in mind. Just the way this is structuring, there's a way this is structured right now. It looks to me at least mildly bullish. But that's as long as we hold above this trend line. If by any means we get below here, I think we'd test obviously these 47.80s pretty quickly, and obviously below that we're looking at these levels really right in here, because I wouldn't expect any of these levels in here to hold. We should be testing 43.58s if we get below 47.80s. Okay, so that's the WTI crude oil market structure. And moving on to Thursday, we've got the Australian employment numbers, U.S. initial jobless claims, housing starts, building permits, and the Philly Fed. On a central bank policy note, we've got quite a few speakers. The Fed's Lacker, Voter, and a Hawk. We've got the ECB survey, professional forecasters. So looking at how these professional forecasters see the outlook for inflation could be quite important to see if we get any sort of tick up in that. Maybe we could reverse some of these moves in the fixed income markets. Only slightly, I'd imagine. Lockhart, he's a voter, and in the middle, Fed's Mester, non-voter Hawk, Fed's Rosengren, non-voter Dove, and the Fed Stanley Fisher. He's a voter, and he stands in the middle of the Hawk-Dove spectrum. We've also got the WTI May 15 OPEX, the options expiry. So that does that could be quite interesting to as we were just looking at that chart of WTI crude oil, what the volume is going to be like on Wednesday and Thursday, because we could see some pretty crazy moves into OPEX. Just looking at the Australian employment numbers, taking a look at the Aussie dollar, it was quite interesting. We went through this last week. Obviously, we had the RBA, no action that came out of that. So obviously, we did expect the Aussie to fare quite well from that. And we've come up and we're sort of testing this trend line that we had in before. But what I'm looking at here is really the nature of the price action that we're seeing in these candlesticks, because we are moving higher. Although we're moving higher, it seems as if the price is starting to roll over here. We're leaving, even though we're moving higher, there's a lot of sellers stepping in. We're pushing, but the passive seller is pushing because he's saying, okay, well, we haven't had a rate cut in April, but pretty much the expectations are for a rate cut, sorry, in May. So although we haven't had an April, they're pushing their rate cut expectations out to May anyway. So there are sellers stepping into this market. Now, if we do get weaker employment numbers, I expect that this trend to the downside is going to pick up pretty quickly, because in any case they're going to be pricing in a rate cut in May more and more aggressively. So definitely keep an eye on for that, because even though we're moving higher at the minute, the structure of this market is still, at the minute screaming to me that it does want to retest these 75.58 level. So bear that in mind. Obviously, if we do get better numbers, I'd still expect, really, even if we do get a move to the upside, that sellers are going to step right back in again. So that could also be a bit of a setup. Obviously, bear that in mind. We're looking at this coming to Thursday. So by Thursday, we might even be trading all the way down here, or a lot higher even. So that the structure of the market is going to change by Thursday in any case. But just bear that in mind. If you are a swing trader, maybe this could be a potential entry for you to get in short. Realistically, you've got your stop above that high right there, and you're looking for some pricing in of a rate cut for May. That's the Aussie dollar. Moving quickly over to Friday, we've got the UK ILO unemployment, European CPI, US CPI core month-on-month. The consensus for that is a 0.2%. US University of Michigan consumer confidence. That's a preliminary reading. Watching out for that number. Consumer confidence is quite important, being as the US economy is predominantly consumer driven. And we've got the US leading index also, which not entirely that market moving, but I put it in there anyway. We've also got the equity index options expiry. So I think that's the main event driven risk for Friday, and a lot of the traders at our firm are going to be looking at quite intently. And then from a market structure point of view, I'm looking basically just wanted to flag up the structure of the S&P. Obviously, we had that extremely just a ridiculous top zone. Basically between these 2050s all the way up to these 2081s and 3/4, which was that pretty crucial inside week high. We did get a close of the week above there, and we pushed higher. Obviously, we had a very strong push in the beginning of the week on Monday. Obviously, 2 weeks ago on Friday, we had the NFP numbers. Those were quite low, pushed the market quite low. And then Monday, we came in and just it ramped just very, very aggressively and managed to actually hold its bid. We flagged a bit in here and then just pushed up into these areas right now. So the way this market is structured at the minute, obviously, you're looking at this saying, okay, well, it should theoretically be taking out that swing high in here and testing these all-time highs at 21.17 and 3/4. Yeah, of course, that is theoretically what we're looking at. But just mind you, we have been setting these lower highs. We haven't been able to make higher highs. So if by any chance we do get to this trend line here, or we do get to that swing high and we can actually close above it, and we start printing back down, that could be a flag. That could be a pretty important flag, because again, we're doing the same thing we did back here. And mind you, again, this candle going up, the way this looked coming into this week, if you just erase these 3 weeks, this very much looked like we were going to test the all-time high anyway. So just mind you, And bear in mind that the way this is structured, yeah, okay, theoretically this should be bullish, but the price action in the S&P as of late has shown us other characteristics that it can show us a very bullish price structure, but then reverse it very, very quickly. Or likewise, a very, very bearish price structure and then reverse that quite quickly. So bear that in mind when you're trading this market because it's been very, very temperamental. I think the main key is if we do get below these 81 and 3/4 and hold, we could see some pretty violent moves back down. So bear that in mind. And obviously these 2033s and a quarter are just still looking extremely vulnerable. Um, but as from a price structure perspective, it does look fairly bullish coming into next week. And obviously the European markets are obviously looking as bullish as ever. So there's no real reason to be selling this unless you're looking for a good risk reward sell at this trend line. But if once we get through that and close, this should be theoretically testing here and maybe even breaking to all-time highs. So just from a risk and money management plan perspective, Monday obviously very little event-driven risks. Not much relevance to those. I'm putting in about a 10% risk allocation there. That is going to change if we do get some moves in the Bund, outside of value or inside value, whatever the case may be. I might have to adjust that. This very much dependent on, you know, how it's setting up. Now this is my risk and money management plan from an event-driven risk perspective, but from a technical perspective, if I'm seeing what I like to see, I'm gonna probably jack this up another 5 or 10%. If I'm, it could be that one good trade of the week, because nowadays you're not really getting more than one or two, maybe three good opportunities every day. So you're really just scalping away, um, you know, feeling out the market most of the time. Tuesday we got 5 high relevance, putting about 25%. Likewise for Wednesday, 25%. Thursday, quite a few venture and risk, but they're not very much of high relevance. So I'm putting about 15% risk allocation there. And then Friday, finally, 25%, particularly looking at the equity OPEX. Right, that's my weekly trading roadmap this week. Thank you very much for listening. Hope you guys have a very great and profitable week. And we will meet again on Friday. We'll be doing my weekly market wrap up. Okay, thank you very much and good luck. Bye bye.